Hey guys, in this video series, I'm actually going to show you how I buy a rental property from out of state end to end. Today we're going to go through inspections. We're now in part 3 of the series. Please drop a like and subscribe if this series helps you out. In part 3, the house is under contract. During the contract process, we send the earnest money and then work on the inspection and the insurance for the house. By the end of this, we should get an approximate closing date as well. As part of a house going under contract, you have to submit an amount to the title company as earnest money. For me, the contract specified that was $2,500. On your written home offer, it's going to show the amount you're supposed to submit and the deadline. So always check the contract, the amount, the deadline, and call your realtor and the title company just to confirm. Also, don't forget to save a copy of the wire transfer receipt as well. That's very important. With that out of the way, we have to select insurance, and this is very important because if a disaster happens, you want to know that the insurance can handle it. So I made calls to about 10 different insurance companies, and I asked each of the agents about what coverage they would put if this was their house, especially since much of them were local to Florida. Write down the different amounts and the prices of the different coverages. Some are going to say things like 1% or 2% deductible. Some are going to mention things like mold coverage, fungi, sinkhole, wind mitigation. Now, being in Florida, hurricane insurance coverage is very important, and also flood depending on where you're buying your property as well. I specifically would like to pay more for a 1% deductible, but sometimes it doesn't add up. And in those cases, I'll even opt for the 2% deductible. So definitely play around with the numbers in your cash flow equation and see how it goes. Also, it's worth researching insurance coverage on biggerpockets.com to see what others think about the policy as well. In the end, here are 3 different quotes that I received. The absolute lowest quote came in at $764 a year with Heritage Insurance and a 2% deductible. And the absolute highest quote that I got came in from Geico at $2,069 and a 1% deductible. From all of them, I ultimately selected the USAA quote at $887 per year, and that came with a 2% deductible. I'm choosing USAA because I know they have a lot of good reviews, and I've had many friends and family members with good experiences from USAA. After the insurance portion, the inspection is the next most important because that gives you peace of mind. When you're buying a property, you want to know all the potential issues that could possibly go wrong and make or break your deal prior to deciding to continue with it. These will typically cost around $300 to $500 as a one-time cost, but they're so worth it. The questions I always ask an inspector after their inspection would be, number 1, would you buy this property? Number 2, what would you do immediately if you had to repair this property, and what would that cost? So with these 2 simple questions, I can decide if there's anything big enough I can add it to the repair request list and then calculate my investment return. The 4 major pillars of a house are the most important to know, and I mentioned this in the previous videos and I'll do it again. Number 1 is the roof, number 2 is the HVAC, number 3 is the foundation, and number 4 is the plumbing. If there's a huge red flag in any of these, you want to recalculate your return on investment and see if the repair cost will make you want to walk away. After inspection, I found out that the HVAC was older and it would potentially need a replacement. Of course, given that the house was built in 2003, it's a 17-year-old house running on the original AC system. So that was something that might have to be replaced in the next couple of years. And then also they mentioned the regrouting of the shower or just recaulking of the shower as well. Due to the home's age, it was deteriorating. Other than that, everything else in the inspection pretty much checked out. Like there were some loose things here and there, but things that are easy to fix. As for the kicker, I found out that it might cost up to $7,000 in the worst case scenario if everything were to break on the house, like including the AC, and if stuff were to seep through behind the shower because of the fact that it wasn't grouted or caulked properly. So with this information, I requested at least 50% of the credit. So I requested $3,500 from the seller to see if he'd at least cover half of it. And he denied, which is typically what could happen as well. With the inspection deadline approaching, I reran my numbers on this property. If I have to spend $7,000 in a worst case scenario, that would bring my total acquisition costs to $56,000. And if I need to recap, That's $49,000 down payment plus the additional $7,000 that it would probably cost to repair this whole property and bring it back to its whole glory if all of that were to break down. And that would drop my cash flow from 17% to 15%. Now, since I'm looking for a 15% return cash on cash, this still meets my expectations, so I'm still proceeding with the deal. Now, as a final negotiation effort, if you can ask for a home warranty, do it. I just asked for $500 to cover the home warranty and the seller agreed. Now, if we think long term, the house with the repairs would return a solid $252,000 over the next 30 years. And I'm not even accounting for the appreciation or raising the rents. If I account for raising the rents $50 every 2 years, and then the appreciation of 3% per year, now we're talking about much more return as well. If I'm spending $50,000 to make $252,000, I believe that I can spend those $7,000 repairs. So that's pretty much it for this video, guys. With the earnest money and the inspection insurance out of the way, you'd pretty much just be keeping in touch with the loan officer and the title company throughout here and closing. And at this point, it's also worth asking about when the potential closing date will be alongside the title company. Just a quick recap of this video, we touched upon the earnest money, the inspection, and the insurance. So part 3 is done, and now we're smooth sailing leading up to closing. In part 4, we're going to talk about handling the closing, which includes turnover to the property manager. That's pretty much it for this video, guys. Please drop a like if it helped you out. Subscribe if you haven't already. It's definitely going to help me out. And I hope to see you in the next video. Goodbye.